So if this is your first time to the channel, we cover a lot of things, everything credit, everything in the credit world. And I'm traveling right now to come to a special event in California. We're in Santa Ana. And one of my best friends in the industry, Just Jay Woodfin, he's been rocking with me for over 2 years, almost 3. No, it's more than 3. Is it more than 3?
No, it's almost 3, bro.
Okay, almost 3 years. And he really has been trying to keep something from me and not talking about it.
I ain't kept shit from you. No, don't lie. Don't do that. Don't do that.
Okay, let's be honest. He's keeping it from you, okay, the audience. He's not telling you the things that he knows because the market's crazy, ladies and gentlemen. Let's be honest. You know, everyone wants to sell you a house. It's the American dream. But at the end of the day, what is your thoughts, Jay, on should someone buy a house right now?
The answer is double hell no. and especially if you're financing, right? If you're financing right now, it's literally the worst time in the last, I want to say 30 years to actually pull out any type of money to purchase a home where you have payments. I mean, we both have connections that give us information when it comes to the actual numbers as far as mortgage goes, bro. It costs almost 2 times as much to finance a property now than it did just 4 years ago. So as far as right now goes, money's already tied to inflationary issues. Income's already been low previous before inflationary issues. You compound that with people trying to utilize that to get a mortgage. Now, not only are you house poor, your house completely broke and everything else falls apart in your life, man. So absolutely not.
You know, I think there's a huge topic that a lot of people don't talk about is the cost of owning a home.
Right.
You know, I covered it on one of my other videos, and I really didn't deep dive into it because there's a lot. I think last year alone, I spent over $40,000 in repairs.
Yep.
And when I think about this, I say to myself, it's like, yo, self, like really, what normal American can really pay for over $40,000 in repairs?
So it's not just repairs.
Yeah, no, it's not.
What about what happens to everything before you get to the repair area? You have property taxes. So let's talk about the American dream. I think you mentioned that already, right? The American dream is to have home ownership, right? To own your home so that it gets passed down in lineage. You and I have both had conversations about property taxes. In America, you never really own your home. I can own my home free and clear, which I do for many of my properties. However, should I decide I'm not going to pay some of those property taxes, which are increasing annually due to the worth of my properties increasing, they come take that bad boy from me. Ownership doesn't really exist. Let's get that right now.
Let me go and stop you there.
Sure.
Let me go and stop you there. Because this is a big thing that I hear all the time. Well, I'm going to be paying into something that I own. I'm going to own it eventually. And it's the same theory with buying a car, right? People think that when you're going to buy a car, you're going to own it. But the majority of loans are getting pushed out more than 5 years now.
Right.
So you don't really own the car.
Right.
The bank owns your car until they take it.
So look at the trends, right? When you look at the auto market, when we were coming up, you could buy a car and the traditional loan was for 4 or 5 years, right? Up to 60 months. And I was like, dang, bro, we could really stretch this out. Bro, they're going up to 84, 96-month loans on a vehicle right now. Mike, what happens when a car is 84 months old, 72 months old, and you start to get those breakdowns, repairs, things, insurance that's continuing to go up because everything else is going up in the market, right?
And I'm going to interject again, and I'm going to say this. This is crazy to think about it. 96 months. You could die before this car is paid off. Like, and I'm not trying to be morbid, okay? Again, like, but you have to look at it realistically and say, like, yo, what am I paying for? So when you go from a car,
well, that's what most people do, bro. And let me interrupt. This is why you have the repossessions happening the way they happen.
The highest rate in American history.
50 months into that loan, 60 months into that loan, they realize I got 2.5, 3 years left on this damn thing. I'm not doing this. I'll just stop paying. And then so what they do, they play the risky game, right? Let me hide it at auntie's house, or let me put it at my baby mama's house. People they're signing up for it because it's affordable, because I go to the dealership and I can afford a $300 a month payment, but they don't realize that $300 a month payment is going to last for another 8 years playing in this game the way they're playing. So it's just really unwise shoppers not doing their homework and going to the car dealerships, purchasing what they think they can afford on a monthly basis versus what they can afford on a time basis and their actual, financial situations.
And when you look at it from an automotive situation, comparing automotive to a home ownership, people are automatically just looking at the payment, their monthly mortgage, their monthly car payment.
Right.
And they're like, well, I can afford that. That's really what you don't want to be looking at, and Jay has touched on it. The fact that, the interest rates are outrageous. The value of a home has been exasperated, and we're seeing homes right now in specific cities like Utah is one of the biggest cities right now. Oh, sorry, no. I think it's Idaho. I could be wrong. It's either Utah or Idaho.
Idaho, South Dakota as well. But go ahead.
Okay.
Yeah.
So Idaho is seeing the largest drop in cost of owning a home. And it's just now starting, right?
Right.
People say the crash is not coming. It's not about the crash. And people need to understand it. It's the affordability. To me, it's the affordability of being a homeowner.
Right.
Can Americans truly afford one? I made a video about it before, talking about the affordability of a car.
Right.
You look at, I bought a Honda Civic in 2007 for $17,000. Let's say $18,000.
Right.
Now you're looking at a Honda, same exact Honda Civic is going to cost an American $32,000.
But Mike, that's less than double, bro.
Yes, but
everything else in our economy has moved at a faster rate than that.
Oh, of course.
Actual inflation of that vehicle. Even income. When we were looking at those Hondas as high schoolers, the average medium wage, the median wage at the time was what, $8.25? Now median wage is up to $16, $15, $16, depending on where you're at. It's moved with the pace of inflation. But what you're not paying attention to is all of the other things that are being completely overly inflated. The housing market, overly inflated. Food, overly inflated. Gas is ridiculous. Those are the things that are taking people
Well, it depends on where you live. Let's be honest.
It's not necessarily
the
the price of the car. And then let me really trigger you with the price of the car stuff. Now, you are talking about the price of the cars at real dealerships, right? Toyota, Nissan, Honda, right? But what you're not talking about and what you haven't visited, I don't think, are the CarMax dealerships, where the lots are absolutely insanely overfilled.
That's I'm gonna be honest, that's for another episode.
You gotta move cars. You gotta move cars to get cars, bro.
Yeah.
And I'm gonna save what I'm gonna say because I know you're gonna put out content on that. But the used car market has completely destroyed the new car market, and it's all because of what happened during the pandemic. So now when we're revisiting the effects of everything that happened during the pandemic, all of the money being put out into these households that wasn't accounted for, all of the PPP loans that just went and evaporated into Lamborghinis and private jet trips, all of that stuff has a cost. And now we are paying that penalty. If you are one of the people who are still living hand to mouth, paycheck to paycheck, and you're not one of the people who have been prepared with your finances, you will be left to the wayside. Now, what people are doing as far as how, let's get back to your point with the housing market, right? With the housing market, hey, what's up? With the housing market is that how do we afford properties? Always gonna have it. How do we afford properties, right? How does housing become affordable? Well, let's speak from a person who already knows, who actually puts people in properties. People are no longer renting properties for themselves. People are renting properties for themselves and two roommates, and they're sharing a bedroom. They're renting 2-bedroom, 2-bathroom apartments and putting 4, 6 people in those units just so they can have a roof over all of their heads. And then they're still going to work and buying their Starbucks coffees. So the reality is that they're not changing the rest of their lives and trying to figure out how to make this really work moving forward. They're doing what they have to do for today. And that's how housing stays affordable and attainable. Let's call it attainable. It's not really affordable, but it stays attainable for the masses in America. But beyond that, bro, I don't really know what the answer is.
It's pretty crazy if you think about it. For a lot of people that don't know this, I was a chef for over a decade. Okay. I was really in the trenches. I take pride in the fact that I was one of the best chefs in North Carolina. But the huge problem that I saw in the industry was my line cooks and cooks weren't making great money.
Right.
As a chef, I wasn't making great money.
Right.
It's just like you had this whole huge, accolade of you were a chef, you're a sous chef,
right,
but you weren't making that great of money. And then I started to notice that people were asking for more money at fast food places. They want $16, $15 an hour. And people thought it was funny. People thought it was a joke.
Yeah.
And now it's reality. And now these people are making that much money. So now what does that happen? Like the dollar menu doesn't exist anymore.
Absolutely.
Is it just me?
Absolutely.
Or when we were younger, we lived off the dollar menu.
Right.
That's what helped us survive. Now, people can't even afford to go to a McDonald's and have a regular meal with their kids or a Happy Meal. I mean, that's just the harsh reality of it.
I told you about my experience the other day, bro, taking my kids to McDonald's. 2 double cheeseburgers, 1 large fry, and 2 small Sprites, $23. And this is just in Southern California. So those are the things where it's almost at this point, we laughed about it, but really it's almost at this point where you tell somebody you went to McDonald's and they like, oh, you got it like that? You know what I'm saying? Like you can go to McDonald's, bro. Like you can take your kids to McDonald's. Each one of them can have their own meal.
Yeah.
Well, almost. You know what I'm saying? Almost. They sharing them fries. You know what I'm saying? But that's where we are in our society right now, man.
And then I hit him with the response, and he didn't expect this. I said, bro.
Right.
Me and my son got 2 salads.
I thought I was giving you game.
Yeah. We got 2 salads at a Zaxby's, 2 drinks, and a kid's meal, and it was over $40. It was nearly $48 with taxes. And I said, yo, I was like, let's be honest here. I was like, how many regular Americans can afford this meal? I was like, that's not normal. But now we're trying to normalize the cost of going to do just simple fast food and acting like it's not even a big deal. And this is all leading into everything. Everybody wants to make more money, which I think, listen, I was a huge proponent. I was the only person in my company as a chef that was pushing for people to get raises every year.
Well, where's the money coming from, Mike?
Exactly.
As a chef, let me ask you this, bro, and be honest with me. As a chef, not the owner of the business, but as a chef, an employee, you're pushing for your people to do better, but are you considering at where that money's being pulled from?
At the time, I'll be honest with everybody, at the time I didn't. At the time, it was just all about me being a proponent for people having a better way of life, better pay, having the ability to do these things with their families. I didn't think about the ramifications as a business owner because I hadn't been a business owner for so long. Like I went through this hiatus where I was just in the workforce.
You were the people's champ.
Yeah, I was. I truly was. You know, and I was the only proponent out there pushing this. And people were like, man, he's really like opening up too many people's eyes. You know, like we got to get rid of him. And they didn't because I was just too valuable. But the harsh reality of it is like, I didn't understand the ramifications of, you know, these people need to be making $20 an hour. You're coming into a fine dining restaurant and the people that are cooking your meal are making less than $15 an hour.
It seems unfair.
It seems completely unfair.
Until you become a business owner.
Correct.
And you realize that those business owners of that restaurant are paying the food costs. They're paying the insurance costs. They're paying the marketing costs to get the people in the door so that you, the $15 an hour cooks, can have $15 an hour to get.
Absolutely.
And all of the things that go beyond that make that business possible. You know what I'm saying? So the legal fees that it goes to set up the business and maintain a good business.
Having a true HR department.
Right, bro. Absolutely.
You know what I mean?
And being able to maintain that business. And really what you do is you show up, you do your little job, you get paid, and you go home. Now, the restaurant owners, if they profit, they get money. If they don't profit, you still get money. They get to go home and tell their wives, hey, honey, we got to cut back this month. And for me, that's the way I've always looked at life, bro. I've been running my own profitable businesses since I was 12 years old, stealing candy from Albertsons and selling it at school. I knew the value of $1. I knew if I could take this free candy that I just got and sell it for 50 cents a piece at school, I'm making a come up. There's a profit in this for me. But I also knew that if some of my homeboys wanted to take some of my candy and sell it for me, they at some point were going to want as much money as I was getting. They were not going to want to give me a quarter out of that 50 cents that they're getting and keep a quarter. They want to keep their 50 cents. But who's the one putting their ass on the line stealing all the candy? It's me. So as the one who is absorbing all the risk, I deserve a cut of what you do and all of what I do. I understood this at the youngest age. So when I was an employee, I knew that in order to get out of this role that I did not want to be in, I had to get out of the role completely as far as a guaranteed paycheck, as far as guaranteed health benefits, as far as guaranteed anything, and be able to absorb some risk in order to get everything I was worth. This is what we're missing in this society. Worth means nothing anymore, bro.
Yeah,
I mean, no sympathy, dog.
Yeah, it's total facts. You know, a lot of people don't want to talk about accountability and worth in any industry at the end of the day.
Right.
And it was one of the biggest things that I struggled with as a chef, just working an everyday 9-to-5 job. It was more than 9 to 5, just so everybody understands. The chefs don't work 9 to 5.
Absolutely.
Okay. You're cranking in, 12 to 16-hour days to sacrifice for a 46 to maybe, if you're lucky, $68,000 salary. And that after that, you pay your health insurance, you pay all your taxes. You're making less than the guys are actually working on the line.
And you're accountable for their work.
Absolutely. And first off, we want to give a shout out to all the chefs out in America, all the line cooks, all the people that are flipping burgers at Mickey D's, every single person that's out there that's actually getting it on a line. I understand, I've been there, but it's pretty crazy to think that in America, at the end of the day, these regular everyday people are not going to be able to afford a home. That's just a harsh reality of it.
That's part of capitalism, bro. That's a part of capitalism. I'm a true capitalist at heart. I do realize if I produce, I earn. If I don't produce, I go broke. So I produce. In this country, we have unfortunately spoiled everybody here where the government makes sure that you have some food in your mouth. Until now, we are at a point where we can no longer ensure that you are going to eat if you don't create the food. You kill, you eat. You don't kill, you starve and die. At some point, bro, the whole strong survive thing has to come into play. That's where we're at.
Yeah, and it's pretty crazy. Like, if you look at the interest rates right now are currently at 8.1 to 8.5%.
Yeah, I think it's 8.25.
Yeah, 8.25. Well, it depends on where your credit's at. Let's keep it real, everybody.
I mean, if you got a paper credit right now, you're getting 8.25.
Yeah. And that's the thing is, like, when people look at trying to buy a home, I often hear, well, all you need is a 580. All you need is a 625. But in today's market, what is a 580 or a 625 going to truly get you?
If you're getting stuffed into a loan that qualifies for a 580, you're going to be getting a 19% interest rate on a mortgage. Your life is over.
Just imagine.
Your life is over.
Yeah, think about that. That's insane. Like 19%.
Foreclosures.
Yeah.
I was watching a video, back to the auto market thing, and it was a dude going through a CarMax lot, and he pointed to a row of Dodge Chargers and Challengers. He said, I want you guys to take a look at these pre-repo Chargers, pre-repo Chargers and Challengers. Pre-repo, because he knows that the dudes that are going to go buy those Chargers and Challengers are going to get it at a 39% interest rate. And 4 months later, that car is going to be back on that lot.
It's wild.
The housing situation is no different.
Yeah.
You get that 17% interest rate mortgage at $6,000 a month on a $3,000 home, you won't be here long.
Be real, okay?
It's truth, bro.
But we need to talk about a solution. So what is a solution? In my personal opinion, me and Jay differ completely. We're like yin and yang, okay? Let's keep it real. But the fact of the matter is, I'm looking for solutions and ways that people can continue to move forward in life. The number one thing is stop going directly to a mortgage lender. You need to build your relationship directly with a credit union. That is the most valuable thing you can do because a credit union is going to do the most for you and get you the best rate possible. Now, the harsh reality, ladies and gentlemen, is even if you have an 850, you're still not going to get the best lower rate no matter where you go because the rates are the rates.
You're not getting 3% anymore.
Yeah, you're not. It's just not. It's not even available. People like myself that got a 2.9% interest rate on their home are holding the line. We're going to hold the line. We're not going to sell our house and say, I'm going to sell my house, take all that money and go buy another house at 8%. No, we're going to hold the line.
But you're just introducing another problem.
Yes, he's right.
At this point, you're introducing another problem because if you don't sell, then there is no supply.
There's going to be,
if there's no supply, there can't be. There's no supply. Builders have to get funding. And if you have to get funding at 8 or building funding at 12, 13% in this economy, what are you going to do? If you don't have the cash on hand, what are you to do?
I'm going to tell you the crazy thing about it because I thought about the same exact thing that he just said. If too many people hold the line, what's going to be really left? But then I go down the street and literally, like, I live in a great suburban area that's very hidden in a very small town in North Carolina. I was very fortunate to find this foreclosure home that has sat on the market for 2 years. And my wife found it at midnight when it went live and we scooped it up. Very, very lucky. That was pure luck. Now, down the street, not even a quarter of a mile down the way, they are building over 100 new homes. Okay, this is insane to me. Then you go another mile down the road, because this is a very rural area. They're building another 60 to 100 homes. And I'm thinking in my mind, yo, where are the builders getting this money from?
Right.
Like, who's funding this? Like, they haven't even put how much these homes are, except for, I think they say like they're starting in the 320,000. And I'm like, yo, who is buying a $328,000 house out here? So I totally believe and understand what you're saying. But at the same time, I believe that builders are going to find the money to get to a certain point. Because at the end of the day, if they're not selling houses, nobody's buying them. Like, that kind of didn't make sense what I just said.
I mean, well, here's the thing. Those housing developments that you're talking about are REITs. Okay, that's not like normal. It's REIT.
Yeah.
And it's real estate investment something. I forgot what the acronym stands for. But what that is actually it's backed by the securities department in this country. Okay, so it's totally different than real estate investing like I do or like anybody else does on this lower level, right?
Of course.
This is where you get investors' money involved in this, and you start putting these things together years ahead of time. When you see a development actually start to break ground, that development was in the works 5 years ago. So they don't have a choice but to move forward. What will happen with those particular companies, they will come up with a price for the home based upon the current market. They will start to sell as they build and continue to build as they sell. They don't have a choice at this point in time. But if you think that they're not struggling, just like everybody else is struggling in the real estate development community, you are absolutely wrong. They are as dead in the water as every average consumer is, Mike.
No, so absolutely.
There's no answer for them either.
No, and that was the interesting thing that you bring up, because I've been driving around these neighborhoods and saying like, yo, what's taking them so long to put these houses up?
Right.
And that's money. It's funding.
Absolutely.
So like, it's been now a little bit slightly over a year since it started to break ground. They started running all of the water lines and gas lines and stuff like that.
Yeah.
And literally 2 days ago, I was like, wow, 3 houses just popped up out of nowhere. Mm-hmm. They got 3 houses up. It's almost done. Yeah. 3 houses in the entire development. And I looked at my wife and said, isn't it interesting that it's only 3 houses? Mm-hmm. And she said, well, why do you think that is? Because they don't have the funding. Yeah. I was like, yes, they got the land, but they don't have the funding at an 8% interest rate. That is for an actual mortgage. Consumers don't understand that the interest rates are going to be much higher for a business deal.
Absolutely.
Out there. And, all these business funding gurus that say, get all these business loans. They're not telling you what those interest rates are.
It's because of the high risk.
Exactly.
Absolutely. You can't really chase that money.
Business deals that are done with business loans are the highest risk in any industry. And this is why the interest rate is astronomical. So my solution is fix your credit, work on your credit, stay focused on keeping your credit A1. This is the time in American history that people need to be focused on their credit so they can move forward. If you don't focus on your credit, one, you can't get a nice place to live, even just an apartment, but you need to be planning for the future and working with a credit union. I cannot stress this enough to everybody. Build a relationship with a credit union and continue to build on that. And that is going to be the backbone of where you're going to go moving forward in the housing market. Because if you're going to go to a direct mortgage lender, I'm sorry to tell everyone, nobody's prepared even to put 5% down on the average cost of a home at over $400,000. What is that cost, Jay? At 5%?
20,000.
Who's got 20?
Something like that.
How many Americans have $20,000 just sitting around in their back pocket?
Right.
That's not normal.
But why not?
Because
of the real solution.
Because at the end of the day, let's keep it real, everybody. At the end of the day, Americans don't want to stop drinking their Starbucks.
Americans don't want to be disciplined.
Correct.
They don't want to be accountable.
This is where the doom and gloom comes in with Jay, okay?
Listen, bro, anybody who followed me already knows what's coming. I'm about to slap you in your mouth. and then your mama out. But anyway, what's going to happen is we're going to have to realize what we truly want in this country. The middle class is disappearing, and it's by design. The rich will get richer, and the poor will stay comfortably poor. But the middle class will be completely lost in the shuffle. They'll be completely lost. They will be the new homeless. They will be the new poor. And there's poor people know how to be poor. Middle class people don't know how to be poor. So either you're going to earn more money or you're going to become far more disciplined with how you spend your money. You are not going to buy the $8 eggs. You're going to buy the $5 eggs. You're not going to be eating on steak. You're going to be eating hot dogs. You're not going to be going out to McDonald's. You're going to stay in for dinner tonight. You're not going to enroll your kids in gymnastics. You're going to play out home with the fire hose, with the water hose. You are going to buckle up. You're going to tighten those belts, and you're going to make this work until the time comes where the quantitative tightening stops and life gets back to normalcy. Most Americans don't even have enough money to fix their transmission should it go out on their car, replace their tires, pay their insurance premiums at a reasonable insurance program. Everybody's rolling around with the most minimum of everything so that they can look like they live a lavish life on the other side. It's time to stop this shit. It's over with. And if you don't understand that this is happening by design, you will be the ones who fall by the wayside. So while you're focused on building up your credit and making these relationships or credit unions, none of that shit works ever if you don't have any capital to invest with that good credit score.
Facts. I mean, he's not lying.
Do both. Discipline is the only answer. Accountability is what's going to be able to force that discipline. If Americans don't wake up, other cultures and countries will, because we're already being bought up. So are we going to become the producers or are we going to become the product? It's up to y'all.
It's accountability at the end of the day, man. And, working with people that are, in bad situations with their credit, accountability is the number one issue that I see. Accountability and really financial management and really getting your finances on track.
The willingness to do what it takes to get your finances on track.
Making the sacrifices that you need to be successful with your credit is like one of the biggest things that I see that everyone doesn't want to commit to at the end of the day.
Right.
You want to blame it on credit repair companies. You want to blame it on whatever it may be. The bureaus, the lenders don't want to give you, the banks are scamming us. Like at the end of the day, we have to have accountability. So I hope you guys all enjoyed this video. This is a crazy video. This is something that I spurred on Jay at the last minute here.
You did, bro.
As you can see, we did come with 2 gold mics. He's a little upset because he didn't have a stand. I'm going to keep it real.
Who didn't bring my stand, bro? Why are we talking about accountability? Wait, who didn't bring my stand?
Listen, I flew all the way from North Carolina to California without a second stand. He's correct. Not going to front, okay? I'm going to take accountability for that, okay?
Listen, you guys already know that you can go thousands of places to get your credit information, but y'all come to us for all the sauce.
So I want to tell everybody, thank you for watching. If there's anything else specific you want us to talk about, drop it in the comment section. Drop some emojis in there so we can get this video going. So more people need to hear these things. And of course, I cannot thank you enough because it's all about you, our community. We cannot do it without you. So I want to tell you, thank you for watching, and make sure that you watch the next 2 videos because those are recommended by YouTube. And don't forget, subscribe to increase your credit score.